Look at been crowd here so far. Welcome, welcome, welcome. And we are going to do 30 minutes of awesome for March 19th, 2024. And we got the FOMC meeting up on tap tomorrow. We've got the S&P 500 blackout for buybacks, and anybody that's like a executive or on the board or has insider information is not allowed to take action for buys or sells or any of that stuff. Hey, Indy, glad to have you. Craig, Darren, Imuku, Randy, Jason, Sergio, Ray, Infinity. And if you want to chat with me during the live stream, like any of these awesome people, click the button right here. The little green doodad over here. Click the button, and a few seconds later, you can chat. All it's required is you be a subscriber, and that's all it is. Then you pop up the live stream chat, and boom, you can chat while I'm live. Now, if I'm no longer live, like you're not watching this after, we're probably in sometime after 6 p.m. Eastern time, and if you're watching this later, you're gonna have to leave a comment down below, or come see me on the Morning Monster tomorrow, or the next day, or the next day, or any morning monster. Anyway, hey Rob, hey Bob, Bob, RSO, don't recognize the name, but hey, JB, welcome everybody. All right, so FOMC, we'll talk about that in a minute. S&P blackout just means no buybacks. The buybacks are kind of on hiatus until after we get through earnings. Kind of starts about, I think it's like 3 weeks before earnings. You're blacked out, can't do any transactions, can't buy stock, can't sell stock, can't do nothing. And then once you report earnings, you can get back to it. So we're in that blackout window, reduced transactions for a little bit here. And, Biden proposing to tax companies stock buybacks too. So I'm not sure how that'll play out in the future, but we're not there yet. So that was in his big budget plan he was throwing out there. General Rush, good to see you, sir. Jan, Jorge, Nikki, Michael, glad to see everybody. So, got to start here. All trading involves a substantial risk of loss. All right, all of it. Past performance not necessarily indicative of future results. This presentation here, intended to be informational, educational, fun, and entertaining, is not a recommendation to be buying or selling anything at all from me, other people, financial instrument-wise, anything like that. Don't buy financial content unless you trust the person who you're buying it from. So don't buy stocks, don't buy options, don't buy bonds, don't buy futures, don't buy Forex, don't buy cryptos, don't buy treasuries, even supposedly safe haven treasuries. Don't buy any of them unless you understand the risks involved. Substantial risk of loss, especially now that the U.S. government racking up that debt at a rapid pace. I got a black thumb today. Yeah, if anybody's noticed that. So, I was making some quesadillas last night in the cutting board. I was cutting the cheese, the Oaxaca cheese, cutting it up, and cutting board went a little sideways. I grabbed the cutting board and right into the knife. It was beautiful. Beautiful. Right in the back of my knuckle. Anyway, so got a black thumb. Anyway. All right. Any questions? If you desire personal financial advice, you need me to give you financial advice. That's not what I do. You got to hire and consult a financial advisor. Has a fiduciary duty to give you advice based on your situation. And make sure you trust them too. Because most people out there just trying to make some of your money into some of their money, and they don't really care how good you do or how much money you have in the future. I mean, they don't really care. Anyway, I'm here, Scout's Honor, trying to be honest and helpful for people. Give you a little something out of the market that maybe I've learned along the way. So that's a FOMC statement tomorrow. Right here, we get the Fed fund rate. We're expecting to hold steady, 5.5. It's like 5.25 to 5.5, I think it is. And the FOMC projections and the FOMC statement all coming out at 2 p.m. tomorrow. Set your watch. That's volatility right there. Be careful. Don't be in a day trade when that kicks off unless you know what you're doing. Remember, all trading involves a substantial risk of loss. The volatility can get you. And then Jerome Powell has not been able to resist talking ever since he's been the Fed chair, Powell. Ever since he's been Fed Chair Powell, he's not been able to resist talking right after the FOMC statements at 2:30. So that's scheduled to go off. He usually talks for 45 minutes-ish. So we'll see what he has to say. So he usually does like a prepared presentation or prepared speech, and then takes a few questions. And we'll see what actually happens. He may come off more hawkish, and more hawkish than expected is good for currencies. Typically supposed to be bad for the market, but I don't know. With the price action we've had, I'm kind of expecting we might see a pop, in all honesty. Now, the blackout period might lead us into a drop. So what we've got right now, we're expecting to hold steady. You know, the DGS2 been holding right here in this range. We've been holding it. We're going to continue holding it, looks like. And that's the range, like that 5.25 to 5.5 box. And the DGS2 is underneath. So there's no reason for them to cut. We're actually, the DGS2, the 2-year constant maturity rate, right there. If you didn't know, the Fed kind of chases the DGS2. Right now, we're above it. So they have no reason to cut, because then it doesn't leave us any headroom. All right, if this starts accelerating and crosses back above the Fed funds rate, if this DGS2, then they're going to have to raise rates. Yeah, right now, they don't need to raise. We kind of went through a trough down here, and that's why they're cautious about cutting rates, because the rate started climbing again. The real market rate started climbing. They were talking about cutting rates here because the rate was dropping away from them, but then they suddenly got hawkish on the last FOMC meeting because rates were climbing, and they're still climbing. So this can lead to rate raises, which I don't think anybody was expecting, that we may get rate raises. Although, if you've been following me for a whole year now, I've basically had this where we would level out, go sideways for a little bit, and then accelerate higher again, possibly up into this 7, 8, 9 area up here before we cross and actually get some sort of financial problem. And that could take us into 25 or 26 even. So I kind of speculated a whole year ago that we would go sideways for a while and then start popping. We'll see if this actually plays out. And one of my crazy predictions that, why did I think that might happen? Because that was the scenario that nobody was talking about. All right, no mainstream media, no pundits, nobody was talking about the fact we may go sideways for a while and then pop. Everybody was talking about we'll come up here, get inflation under control, and then we'll go down again. I think oil prices are going to push inflation higher again, and then interest rates are going to climb with that, and then we're going to see the Fed have to raise rates, and it's going to be down the road, before we get this under control. So that's what I suspect. So this rate, I think we're just going to hold, but we're seeing the real market rates climbing. If they break out above where we kind of topped out already last year in October, we could see this accelerate, and the Fed have to raise the rates to get this under control, or attempt to. They're always just chasing the rates, and they're not going to get anything under control. The market sets the rates. The way I said it was kind of a misnomer. The market sets the rates, and they just chase the market. So that's, it's been that way for as long as I've been trading with real money, and kind of as long as I've been alive. So they're always chasing the market rate. Every time these lines cross, though, since I've been trading, has led to some sort of financial freakout, market freakout. We had that one there, that one there, that one there, and now we're right here. What's going to happen? That's why I've got this big purpley arrow. Big purpley question mark. Like, what's going to be the financial crisis here? Does it happen from here? Does it happen from up here? I don't know. We're going to find out. Stay tuned. Make sure you subscribe. Make sure you hit the alert with the bell with the notifications. I'm going to be here. I love doing this stuff. I've been doing it for a long time. Not YouTube and not helping people, but I've been trading and keeping up with this for a long time. I've only, this week actually makes 3 years that I've been doing this guru thing, teaching other people this stuff, sharing what I know with people like you. And I thank each and every one of you for being a subscriber, being a follower. Without you, I wouldn't be able to do this. So I'm able to help other people because other people want the help and find the help beneficial. And then more of you come, and it just keeps getting bigger. And I am very grateful for all of you. And if anything I say today is helpful, make sure you give me a like. Thumbs up. Anyway. All right. Thank you all for being here. It's my 3-year anniversary for starting doing this stuff. Anyway. Thank you. All right. That was the morning list. Let's go to the red list. That's usually where I start. Now, the S&P blackout period. So we're getting through the FOMC meeting tomorrow. And then we're ramping up into this buyback blackout period. That's where reduced activity occurs. And we also see money flow at the beginning of the quarter. We're at the end of the first quarter already. Can you believe that? We got 1.5 weeks left. So we're about to start Q2, about to start the second quarter. Earnings will come out starting kind of the second week of April. And we usually see money flow into financials first. That's like Bank of America, JP Morgan, Wells Fargo, those big financial banks. They're all kind of reporting earnings right there around the beginning of the month. All right. And that one's actually the middle, right near the middle. Let's see, JPM. Right there in the 12th. WFC. Right there on the 12th. So right around that second week of April. Pop the silver. Yeah, right there. 12th. Let me put myself on the right side here. And so second week, that's what I thought. We're going to pick up. So we'll see money flowing into financials probably through Wednesday, Thursday here. And then it'll start flowing back out and flowing into big tech. And big tech, we see, let's check a couple of them. Big tech should be coming up after, yeah, right near the end of March, April. Yeah, April. I was like, period ending March, April. Yeah, April 23rd. So we usually see big tech ramp up right after the financials. So we see that money flow it'll start flowing out of financials into big tech. Big tech will rally pretty good. And then we'll see that faucet turn off. And we'll see some money flowing out of big tech and dispersing through other areas of the market. The hot sector after those two tends to vary quarter to quarter. So we typically see financials first, and we see big tech, and then we see the money disperse. And there's no usually you can kind of see a pattern in something like FAS. You can see it's already been going. And this can abruptly end at any point in time. All right. Usually every quarter, we look back through here and see the quarters. We got, end of the year, we had a ramp into the end of the year, and then it got a little pullback. That money, that's what I'm talking about. We see that money flow back out of financials as they report earnings. It's not always a big pullback. Sometimes it's just a little pullback. Sometimes it's hardly distinguishable, but we see a slowdown, and then we see money, if they want to keep it going, keep the party going, it'll flow back in. Sometimes we see, like in October here, we saw a little ramp in October, then we saw a big pullback into November. But a lot of times you'll see the ramp right into the beginning of that quarter. And then sometimes you get a freak out, sometimes you don't. But typically there is a little period of push into there. All right. We typically get a ramp into that start of every quarter. Almost every time. Sometimes it's short, sometimes it's long. Usually it's right into that beginning. And then we see that money move from there to big tech. And I don't have this one, 3x leverage. Why did I pull up this one? Because it over exaggerates the move with this FAS right here. It amplifies that money flowing in. And then we see big tech, and a lot of times we see them rally right up to the week before, right up to the couple days before they report earnings. And we're talking about Magnificent Seven kind of, Meta, Mama Nat, Meta, Apple, Amazon, Nvidia, Google, Alphabet, whatever you want to call them. So that's the rotation, and that's the buyback blackout period that we see coming up, starting basically this week. We're starting the blackout period. So, all right. Now, hitting up the red list. I usually hit up ES, NQ, and ES did something interesting today. ES, 1 exclamation point right here. I need to jump down time frames because what happened was on the small time frame, we actually broke out above that 52.20 area I was talking about. Didn't quite make it to the 52.50 area, and we have the higher target up here from the bigger pullback. This is like a nested pullback inside here that we did. 52.85-ish. And you may be like, how the devil do you even trade ES1 exclamation point? JT, what are you talking about? It's just S&P 500, SPX, SPY, XSP, whatever your favorite weapon to trade S&P 500 index is, you can go there. This is just the futures for it. They rolled over recently to a new contract, so they have about a $50 discrepancy between the cash index and the futures, but it's all the same kind of pattern, all right? And then, next up would be Nasdaq, right here. It did the same sort of pattern, breaking above that 618, setting it up 1840-450, possibly the bigger. That would put us up above the 618 for the bigger pullback that we did, and then possibly sets us up to rally up into this, back to the top of the channel up here, 18,870 to possibly as high as 19,100 up here. But it's kind of setting us up. So if we break above, that was a bigger correction that we've been doing on Nasdaq. ES was kind of the outlier. It was not in this giant correction. But now they're kind of coming back into alignment where they may both pop. And this development here today, the way this set up, it's got me thinking that we may see a larger outsized upside move after the FOMC to some kind of crazy upside target. And then we roll over. We're getting near the end of this. Like, there's only so much more runway we can go before this thing starts unraveling here. Just throwing it out there. Cautious. Now, over here, I'll grab the right chart. Load her up, buttercup. I don't know what's going on there. I've been speculating that we could see an outsized pop. That could take us up to 5,500 possibly. And we might top out 53, but 55 if NVIDIA became the biggest company in the land. We could see some sort of outsized pop. I just want to throw that out there as cautionary that we could see if NVIDIA went to 1250 on some crazy move. Jump back to the daily chart. NVIDIA jumping up here to 1250, becoming the biggest company out there. They got $3 trillion market cap. This could lead to a big market correction, all right? A very large market correction. I don't like Dow Jones because it's so manipulated. It doesn't tell me anything. 30 companies is not even like statistically significant. So I go with the S&P 500. I go with the Nasdaq 100. And that's kind of how I roll. Then I also look at the Russell. So that kind of Nasdaq 100 gets us our 100 bestest companies. This index has been up like 14 of the last 15 years. Russell, it's the small caps, and then S&P is just kind of the broad brush 500 companies through the market. So Russell right here, IWM, series of tickers. NQ would be the QQQ, all the derivatives of Nasdaq there. So Russell here showing some less enthusiastic price action. Even on the low time frames, we're not looking very enthusiastic here. Certainly not setting up anything like Nasdaq and S&P have. This is looking more bearish, potentially still holding lower highs. Not so sure that our small caps are going to participate if we get some kind of pop. And we've got that CRE situation sitting out there, which is commercial real estate. Lots of potential problems for the smaller cap companies are sitting out here right now. Oil, continued to push higher today, and then got a little bit of pullback. Let's see, zoom her up where we can actually see it. We continued the rally and then pulled back right in the end of the day. I do expect that to, I would really like to see that get up in this 85, 86 area at the minimum. And optimistically, if we can go hit like the 90 area up here, that was, and then get a pullback, that would set us up for a very, very, very bullish move later on this year. Possibly, you know, like really bullish. I mean, we're talking like 113, 123, 140, 150, maybe even 170. Of course, that may take into next year to get some of those crazy numbers. They may be like, nah, oil can't move that fast. Well, look right back over here. We went from 94 to 130 in just a few trading sessions. And that wasn't that long ago. But of course, we came right back down after we did that exponential kind of crazy move. You see it right there? That wasn't that long. If we do that kind of thing, it's going to cause inflation to go ramping up again, because everything runs on oil. Everything. It's not a thing that you touch that hasn't been moved or built or created or something with the power of oil, one way or another, or gotten to you, or, you know, so transportation, everything, power of oil. Brent, this is European. Oil is looking a little spicy here, trying to break out and go. Gasoline, breaking out. We're getting above that prior high. This is all leading to potential big up in energy. All right, we just have a couple more highs up here to break above, and then this thing can run like a banshee. It can run, really run. We've had that high back here. We had this low down here, highest high, lowest low. So we have a little bit of resistance up there at about 345-ish. We get above that, we're looking at $5 wholesale, maybe even up to $5.75 wholesale. That's without adding the extra dollar worth of taxes. All right. Be careful. Heating oil, diesel fuel is the one bright spot so far. We are rallying right up, finding resistance at the roadmap line. This one is not indicating a breakout yet. We're still lower high, still finding resistance at the roadmap line. Watch for the breakout. Watch for the breakout. We didn't turn bearish, so thinking this one, while it still could bounce down, one more go, starting to look like we may do a bullish breakout here. Not so sure. We barely held on to that 786 right there. Turning higher, stopping at the roadmap line so far. This can lead to a bigger up. Got the 618 right there also. Significant resistance. Got to break through. Put us up to 307, 320, and then we'll see where we get from there. Has been on a bigger consolidation phase. It hasn't been really moving very much for, gosh, a little while now. We kind of topped out back in September, and we just kind of been hunting for support that we can bounce off of. All right, moving on. Next up, natural gas. Still looking pretty weak. Still following my line down to potentially lower prices here. I think we're going to see a move down in this $1.30 area, quite possibly. So far, we bounced down right off of the 1272, bounced back up to the breakout level, that level established with these two lows over here back in a year ago, really, at this point, February 23, April 23. We broke down through it, found resistance going back up into it, pushing down. The most likely scenario would be one more push down to a lower low. That would be the most likely pattern. Doesn't have to do that, of course. Nothing ever has to do it. Anything's possible in the markets. But the most likely pattern would be a push on down to lower prices. And that could take a while, too. As we've seen, this whole breakdown took way longer than I thought. Sometimes it goes that way. Predicting time is the hardest freaking thing, but we did eventually get to those downside targets. It just took us a freaking year to get here. Gold, was being weird today, is what I would say. It's kind of like opposite hammers there. You got their inverse hammer with a twist, you know, Thor hammer, death hammer, claw hammer, whatever you want to call them. Rejection going lower, but one's green, one's red. I don't know. That holding the support so far. If we can break out and go, much higher prices, but I don't like this price action so far. I say it was weird because when you go down and look at the smaller time frames, it's just been like indecisive here, not breaking above the 30-minute roadmap line at all. That's not showing me strength right now. So does cause me concern. I do like these long tails, but I gotta break up through some upside resistance here. Quit making lower highs. So I've got an eye on that one. Silver broke back below the 30-minute roadmap line, and probably need a little rest and retrace after doing that pretty bullish move off of this low right here. So it's got a kind of a nested setup right now. Probably needs a 4-5. One more big little push up. Big little push up. It's going to match. Probably needs a little consolidation. Got to run some numbers here. Yeah, right around. Yeah, that kind of about there. And then we top out right up here about that price, make a higher high, and then we'll probably get a bigger retrace. That bigger retrace probably looks something like this. Right here, back down in this same zone. Right around here. So we're looking at silver kind of doing a little bit more retrace. Another pop. A bigger retrace. And potentially holding there and turning higher. A bigger pop. That could be pretty wild. We're looking at a move up in this $32 area. Maybe out into the summertime. Maybe into the fall. Something like that. So we can see some bigger moves in silver going forward. Copper. That's a nice move. Nice move. I was expecting this. I have been expecting this to drop. And until we get higher than this point right over here, it's still bearish. We've been softening up, trying to get through this trend line, finally popping up. Got to get above that high, though, if we're going to change the tune here. This does look like a giant corrective type structure, but maybe, just maybe, we turn something bullish here and go higher. We rejected that 618 so far. If we can get through it, could take us up to $5.50, possibly $6 on copper. And lumber's just not been the same ever since they changed the contract. Hard to talk about that. If you have any requests on other futures or anything like that, you can make them. Now, we're going to do the point where I do requests. And the rules are 1 ticker per person. Please use caps so I know it's a ticker. Please, not company names. Use the ticker, please. If you're requesting cryptos, please put the US dollars on there. Whatever it is, like BTC USD. Please include that. There's some cryptos or have a similar name to some company tickers, so it can get confusing. And then 1 ticker per person in the caps. Let somebody else go before you make another request. If you request several tickers, then I'll probably skip over you. All right, that's kind of the rules. I'll go as long as I possibly can here. Looks like the market opens in 30 minutes, so I'll go at least 30 minutes, if not a little longer. So, all right. Ready, set, go, right? All right. Mara has done one of my favorite patterns. I have to admit, this is probably my favorite pattern in the market. Has it triggered yet? No, but it has retraced to the roadmap line, holding support at the roadmap line pretty darn strongly. This is pretty nice so far. As long as we hold here and break back above the 618 level, which is not clear on here, which would be right up here at 28. Now, aggressively punching back up through. Now, if you haven't watched the market roadmap video for the week, this was on the list. See those gaps where we gapped down and gapped back up and then bounced off and then found support there and then crushed down through. That's the aggressive type entry. So I'll move up through that 2250, 2260 area. That's the aggressive entry. Conservative entry, I'll move up through this 28 area, looking for 38 and possibly 44 on the upside on that next extension. And it all starts holding resistance right here. So need it to hold. Need it to hold. All right. Can you use mags check tech? I wouldn't go that way. I mean, Mag 7 is Mag 7. They're kind of in a class by themselves, but I wouldn't use it as a measure for anything else out there. LAC used to be one of my favorite plays, but lately this thing just sucks. Turned really kind of gnarly here. And we're going to have to... They do a split, or what did they do? Something's up. My chart's all disconnected here. Just remove the drawings and correct it up. Something's up. Yeah, that's a gnarly, nasty pattern. It looks like it's going to come down even further. I would not be trying to pick the bottom right now, especially with a bounce off the roadmap line from below. That indicates that we could be seeing another extension lower down to $2.78. Gosh, man. I used to trade that one a lot, but not lately. Oh, it's pretty bad. All right. B. Riley Financial just keeps churning to the bottom. So this has got a pattern to possibly go on an extension down to 250. Now, the interesting thing with B. Riley is the fact that insiders have just been buying. There's no insiders selling whatsoever. Insiders buy. What do they know? I don't know. This company buys distressed. You know, they're investment bankers. They buy distressed companies. I think they bought out Blood Bath & Beyond when they were going bankrupt. And they do what they do to liquidate the company for the most profit they possibly can. So this can be the bottom here. This, it seems to be finding a bottom, and this could lead to a large upside change. But at this point, it's catching a knife until we're back above the roadmap line and making higher highs and not lower highs. So far, that's lower high than here, lower high than here, lower high than here, lower high than all these back here. It's not exactly a bullish pattern so far. Those are huge numbers too. When we look at this, 18, 37, 43, 75, 90, 110. We're talking about up here, 90, prior high, back in 22. We're back at the COVID lows. That's what's crazy here. Back near these COVID lows on B. Riley. That's kind of like the what goes up, came right back down. That's almost a market sentiment chart. If you haven't seen that before, go up, right back down. All right, moving on. ASML. It's just been hanging up here. It needs a retrace. It hit that 1272 target of the big move up and probably needs to come back down. Now, the classic pattern is hit the 1272, come back to the breakout, and then rally up to the 1618 if it's going to be bullish. If it's not going to be immediately bullish, the roadmap line, and it may mess around here until the roadmap line gets up there. And at such time as it kind of comes up like this, and we could just hit it up here and then bounce and go. That's entirely possible too. We're right in there. We can churn around in this area until all these things kind of come together right there. So we do have support, those prior highs. If we break below that though, we could go on a deeper retrace back down where we consolidated down here and gapped up. So I'm not interested in trading this until we do some kind of bigger retrace. I traded it down here, been off of it, or down in here, been off of it since here. I've been off of it for a while. It was a short-term trade. All right, moving on. NTAP, NTAP. If I skip your request, it's not on purpose. The chat I have is not like the YouTube chat. It jumps around on me occasionally. Sometimes I miss tickers. If you ask me a question, please ask a full sentence question. Don't assume I know what you asked above. NTAP. Oh man, talking about some gappy stuff. Did think we would top out up here at 118. We didn't quite get there. Watch for a retrace. Those gaps. That's a rough chart. That is a rough chart. See, we've got this big pullback right here. Tap the 1272. We might come back. Oh. See, it has that large consolidation area right there. We may go test that before we pop the 120 area. All right, moving on. PLTR. I hit the 1618. Do expect it to retrace back to the roadmap line now. Somewhere in that. Use the curve tool up there. So I do kind of expect that to come back down, retest this before we go even higher again. If we get below that, we could go on a deeper retrace. MU. Stuff at targets. Be careful chasing it higher. Downsides are not always guaranteed. I don't play against the market that much because look at it, the 100 and whatever year history, the S&P 500 goes up like 8% a year. All right, on average. Like, why would you bet against the market in a long-term way when 90% of the stuff goes the same direction as the S&P and 8% a year is the average up? It just doesn't make sense to, unless you have a really good short setup on something that's just been crazy, like, I don't know, SMCI maybe. It's up like 1,000%. I mean, that one may come back down. It's highly likely that we see something like that. Now, this one looks like it's going to come back down to this area. It doesn't have to. Came up shy of the roadmap line before. Last time we hit it was back here in October. We could come back down, or we could hold one of these higher lows and then extend on out to 105, possibly 109. But man, come on, break above this trend line. Held that trend line 1, 2, 3 times now. And retracing yet again. I want to see it hold above this big consolidation zone we had back here last summer. I want to see it hold that, break above this downtrend of these 3 highs here. Get on to extensions. Break above this high we had back here in March a year ago. If we can get above that, finally, we start tipping the odds. We're going to go up here to 80 at least. We'll see. I've been holding some, I'm basically break even on a position I've held since back here in June. I was up like 300%, and now I'm up no percent. It was basically flat today. That one needs to go. Needs to quit farting around and go. NVDA has nothing to do with any political anything. Now, I'm just going to clear this chart up because this is a lot. Well, this is a lot. Let's clear this up just a little bit. The only thing that really matters, NVIDIA up here, $3 trillion market cap is at 1250, basically. Right up in here. Anything shy of that, we could see a large outside retrace. The roadmap line way down here. We touched it back here in October. We went on some wild ride higher. Coming back and touching it again would be normal, or meeting it out here some point in the future. It could be normal. And if we break down below it, a retrace on back down to that gap would be kind of expected. I mean, it's kind of where we had topped out years ago. right there. Revisited that breakout point. Wouldn't be out of the realm of possibility. Say what you want to. The reaction to the new chips they announced yesterday was not all that bullish. It's kind of showing some exhaustion. We may see some rotation out of NVIDIA and into some other things and get a pullback. You may be like, well, NVIDIA doesn't do big pullbacks. Well, it did one there. Did one there. I mean, did one here. Did a pretty massive one over here. All right, NVIDIA does do big pullbacks. It's just all relative. So be careful. There's other people trying to make crazy fast chips to compete with NVIDIA. They're not the end-all be-all. They don't have the market cornered. So they're the leader now. And if they become the biggest company in the world, it's a cautionary tale. We saw Cisco do that before. We've seen ExxonMobil do that before. We've seen GE do that before. And they all went on an epic downward trajectory after being the biggest company in the world for a short period of time. It's a cautionary tale for NVIDIA. The world was going to run on Cisco routers until it didn't. Riot is doing something much more bearish than Mora and looks like it's potentially going to extend down to the $7 area. Now, it could hold here and go and just be a sloppy chart, and we could get a rally up to 25, possibly 32. It's not very strong at the moment. Not very strong. It did not make a higher high here. It made a lower high here, made a lower high here. So far, this is setting up to be a watermelon seed squeeze type situation that could just consolidate in this general vicinity for a long time. It could keep consolidating in this narrowing range for a good long time. The rest of the year, potentially. All right. That's not my favorite pattern at all. At all. In fact, not many things I say I hate, but I hate this watermelon seed squeeze pattern. It's so unreliable. There's not much you can do with it. Or I have very little luck trying to trade this. So I advise caution there. SMCI has, so I don't know if you paid attention, but Goldman Sachs 2 weeks ago upgraded them, said that put a $940 target on them. They started rallying like crazy, and then lo and behold, like yesterday, there was a stock offering announced. And Goldman Sachs, the one who started coverage and put a lofty target on them, is the sole underwriter of this stock, of this dilution. And the sale is in the pricing was in the $900 to $1,000 range, and then what do? We drop right back down through the bottom of the 900 range. Dilutions are not bullish. Be careful. It's good for SMCI, not good for shareholders. We may see a rapid decline. This has been a crazy move up. Would not surprise me to see a retrace back in this area or even back to this area. Be careful. That's what I would say. Be careful. This is classic crazy bubble type price action. Be careful. When people are like, I'm a genius, we're all getting rich, I'm going to buy more. Just be careful. I've seen this happen so many times. And you never know where this final top is. Like, could it go up another 1,000? Well, it could. And then it's going to be epically bad. So be careful. When we find the top, it's going to drop. And it's going to be pretty vicious. Reminds me of so many other things we've seen in the past. So many stories. All right, Rose. That doesn't look like a ticker. I assume you mean Rose USD, which not going by the rules. or ticker request if you want a crypto, write USD on it. So I know you're trying to see a crypto pair. And we topped out right at the 1618. Imagine that. Retrace back. And so potential roadmap line revisit right there before we can go again. Downside potential holding support looks pretty strong so far. That could lead to from there 20, possibly 22. And for those in the crypto power plays, you can go watch that for more upside targets. Dog USD. Dog, you're looking for Doge? That looks like it's coming down. Now, interestingly enough, if we get below that little consolidation here, it changes the tune to bearish, very bearish. Apple, AAPL. I have this target down here that I kind of expect us to go hit, actually. It's 1, 2, 3, 4, 5. Yeah, I expect one more flush. One more flush should be about that big. Oh, yeah. Apple maybe get one more flush down in this 160 area. May rally right up to that breakdown point. You know, had the low, the low, the low, the low, the low, and broke down. May come back up, test that. If we hold below it, probably going below here, down here, below this low, down here, lower than this low, probably. One more lower low can wrap this baby up. And then if we can get above that consolidation up there, upside targets. But for now, still looking lower on Apple. DKNG. Fingers get the right. Be on the right keys. DKNG keeps bouncing off that 1618. Retrace would be normal. It's a lower high, lower high. If we break below this low, we're coming on down to the roadmap line. So that low is your indicator we're going down. Could we push out to a higher level? Sure. I mean, 51, maybe 55. Is it likely? It's low likely at this point without a bigger retrace. And this target right here is just that retrace projected right over here, which takes us right back to the roadmap line. So KO has not been a big mover, just kind of farting around for a long time. Did a head and shoulders and then never did anything off of it. Just farting around. Giant consolidation for a long time now. Started this in 21. This zone, well, it's been messing around this zone for a long time. Uninteresting. Not really going anywhere. I don't expect it to go anywhere until it breaks out above the highs or breaks down below the lows. Big bunch of sideways. XLE. If we can get higher in this high, just take this off. Clean the chart up a little bit. Well, let's just remove it all here. Clean this up. This high, this ultimate high, this low, the lowest low after that high. We have set up resistance right here. Resistance here, all the way over to where we are now. If we can break above that, 99, possibly 106, and possibly, it's possible we get something bigger going, but at this point, I wouldn't put it much past 99 or 106 without getting another retrace. It could go, but I don't see it yet. I think we'll get another retrace and then a bigger go. It's kind of like oil. I think it might get up to that 90 area. Then we get a bigger retrace and then it goes higher. UNH. It did this bigger retrace. There you go. Let's just clean it up. So we've been consolidating, and there is a clear resistance to going higher right there. Very clear. Go off of this high, that low, resistance. We've done a retrace and 590 on the upside, but you know, even smaller resistance is right here. We got to get above that, and then above that. Lots of resistance going higher. And it just doesn't look like huge opportunity at the moment. You know, that's a big consolidation zone. Buy at the lows at 456, sell at the highs at 460, 560, excuse me. If it can break out 590, 600, but it's not proven it's going to do it so far. CI would be a much better play, at least 365, possibly 399. That one's actually trending, whereas UNH is just chopping. Anyway, Intel doesn't have a ticker. I think you meant INTC. Please use the tickers. I don't always know. There's so many cryptos with tickers that are similar to stocks. It makes it very difficult. That is support. We can hold the support, and I thought we might get to there. We're pretty darn close. That was a lower low than here. We can hold that. Positive for going higher, possibly 54, 57. The entry would be up here above 48. Can it break down further? You betcha. You betcha. That would kind of be a support area off of that high. We came up there shy of that, and then we busted right through it, came back to that zone. We may retest that zone one more time. If we don't hold that zone, it's looking pretty bad. But if we can hold that zone, we could see it pop on off higher. Turn down to the 618 there, though. Gnarly. Difficult to predict that one right now. That's gotta wait for something to clear up for me. That's why I'm not trading Intel. Anyway. That's a weird Euro Turkish lira. Let's go with forex.com. I haven't really charted this before. There's nothing but up. There's no pullbacks, no nothing, no. It's just a big uptrend. Keep on chugging. That's all I would expect. Just up, up, and away. SPECE. Orinco, you gotta let other people go. And garbage. Hi, garbage. Don't touch that. That one looks like it's going down in a blaze of glory. I would expect that to truck on down there to that zone around 17. And SOUN. Target up there, 1270. Then watch out for another retrace. CSIQ, Canadian Solar, is set to go on down further. Low to high, yeah. Right down here, 15-ish, 15, 16, somewhere down there is where I would expect that to be heading next. Hood. Upside target 25 at this point. That's what I would expect if it's going to continue the bullish path. SMH needs to come back to the roadmap line. It tagged the upside target that I had for a long while down in this 187, 175 area. Probably sometime out here in the future. It could go fast if we get a big market pullback, could go slow if we don't. I think that AI chip stuff is probably played out for less likely to get more big upside for now. Just kind of having been around the markets for a few years, we typically rotate around. We don't just keep hammering the same thing. Everybody gets kind of bored of playing NVIDIA and stuff like that, and we go do something else for a little while. So we may come back to it. It may just kind of languish for a little while. Then we come back to it, and then it goes crazy again. But I think we're going to see chips, SOXX, SMH, USD, all these kind of languish a little bit. So all those semiconductor ETFs, I think, are going to pull back a bit. They need a break. I mean, could keep being crazy, but it really looks like it needs a break. CVE looks a bit like a hot, choppy mess of going lower. It's like lower highs, lower lows, until we break out of that and make higher highs. That's kind of the, I'm just doing more of this. Why would you expect it to break the pattern? I mean, it's doing a consolidation. Call it a flag, call it whatever you want. That's what it's doing. Did one kind of over here on the way down. Now it's doing one over here on the way up. Eventually it could break higher, or it could break back lower. Don't expect them to do something different than what they've been doing. So they prove that they're going to do it. DVN, tag the target. Shoot, man. Sometimes I get lucky. And here's the upside resistance right there. If we can get above that, we go higher. If not, well, could just languish around for a while. Got resistance there at 63 to 66 area. If we get above that, we tip the odds to 70% likely we're going up to 89, but that's quite a bit higher than where we are right now. Before we confirm that. It's got some work to do. Kroger has been turning around, yeah. After farting around for almost a year and a half, almost 2 years, finally broke above that 618 level. Tipping the odds, 70% likely we're going to rally right up there. Then maybe do a retrace and a final push. Could just pop up here, but that's the most likely scenario. Right there. BitX is pretty much it's a leveraged ETF. It's not really tradable. I mean, not really chartable, excuse me, chartable. It's just multiplying the Bitcoin move. And we dipped a little further. Potential to retrace higher. This move right here. If, leverage stuff doesn't always, our market's back open. So I have a button for leverage because leverage stuff doesn't always follow my patterns. Like there's low price stuff under $10, not counting cryptos or Forex. Stocks, low price stocks under $10 don't always follow patterns. FDA controlled stocks, biotech, medtech, anything that the FDA gets involved in doesn't really follow that. China stuff, and then leverage stuff. Like that's the four things that don't really follow patterns. So if you ask me about leverage stuff, just go to the underlying. Look at Bitcoin. That could find a bottom, but it's going to move however Bitcoin moves, and it's going to move twice as big as however Bitcoin moves. So on a percent basis. MCD probably has a little bit lower that it could go. We have this large consolidation pattern going here. Could dip just a little bit lower. I've got an alert hanging right out there around 273. If we can do that, bounce and go, it leaves a nice upside potential. Talking about like potentially up here around 350. If we don't get that low, it's okay. It might just be 340 might be all we get. We'll see. The bigger the retrace and the stronger the return, the higher we can go. So, DK and G already did. I just skipped a whole bunch. That was awesome. BitX already did. S5FI. I can talk about that in the morning. I can pull it up. S5FI. It's just an oscillator for the market. Stocks with a 50-day. We're just hanging down here. Lower high. Made a lower high. That can roll. Watch out. SYK. Parked up here in no man's land. Next upside target 379. And support down here at the roadmap line. Wherever that might be when we get there. Path. Roadmap line might be where we're heading. I expected a retrace. Got a little further pop. Right back down. Still expect the retrace back to the roadmap line before we can bounce and go. And we got resistance up to 30. So it's got some, that's a big gap down right there. That's resistance so far. Rejected with a lower high. May come back, test this box if we don't hold the roadmap line. That's what we got on UiPath. Do you favor buys stocks over options? That's a strange question, I guess. It's all about time frame. Like, am I able to play options in the time frame that I expect some move to happen? Time is the hardest part of this whole game. And something like SWBI, I'll just use a couple examples here. SWBI, I have shares. I have a buttload of shares because I expect this giant move. And it's probably going to take a while, like maybe 26, maybe 27, maybe 28. Could be out here in the late 2030s before we get up to like 265. That could take a good long while. All right, so I have shares, and I bought them back here on this dip. Option, like you could only buy like 25 options when I bought that, so that wasn't going to give me enough time. TGLS is another one. I have shares that I bought down here back in November. Bought a good chunk of shares because I expect a big, large move up, and it may take well into 26 before we get there. And it could be even up here at 200. When you buy shares at 30 and it goes to 200, that's a pretty darn good return. And you don't pay any theta, you don't pay anything. Sit on that for a long time. Now, something like MSOS kicked off an alert today, and the time frame on this is relatively short. I'm only expecting to move up to like 11. I played that with options. So it's all about time frame. I'm only expecting a small move, only expecting that to last for a couple weeks maybe. So I played it with options out a couple months. And I mean, that's something like NEM. I played with options because I wanted the leverage on the move. But this move will probably exceed the length of time that I have on the options out to 26. Hopefully that answers your question a little bit. Yeah, the euro, Turkish lira. I mean, that's, you can say it's extended, but I mean, look, it's been on this path for, like, where's extended? Like, it's been doing this trend since the beginning. So the Turkish lira has been approaching 0 euros for a long time. Yeah, do it a different way. 1 over. That's a dumpster fire. The Turkish lira is going to 0, essentially. That's a nation that can't control its currency. Debasement. Decaying asset, essentially, right there. All right. And LMT. Just stuck under the roadmap line. Bearish bias. Target down here, 370-ish. Ollies. Ollie, oxen free at the roadmap line. Let's see. Clear it out. Next possible move. Tool. Next potential 87. Conservative entry above 80. $7 upside. 90 possible. But it doesn't look likely based on the last couple moves. Hims and hers health. Nice pop. 16 upside resistance. Right in the ballpark. Watch for that. Could pop up at 20, but it looks like, I mean, look, we've had these large retraces. Would not shock me at all to get a nice big fat retrace back down into the roadmap line somewhere. That's medical nursing. So if FDA gets involved, though, watch out. It can just do something unexpected. AMD expecting a retrace back down into this target zone, 85 to 100. One time or another, still the target zone or retrace. If we can retrace that, and then we can, when we retrace this, whether it's from here or from a higher level on up here, eventually we're going to come back in this zone, and that would be a point where we can find a bottom and build something off of. Citigroup. Rejected the head and shoulders. That's good to see. A little bit bearish and cautious there. Did the extension, 59, 61 on the next upside. Then we need to see a retrace to the roadmap line. Could go on a bigger, we do have the much bigger pattern. This high, this low. Yeah, we do have a resistance right there at 64. If we can get above that, looks like 91, possibly 106. So the bigger pattern, resistance, hanging out right here. Where we did that consolidation on the way down. Bottom. It's made one big move up with no retraces. So I kind of expect a reaction off this zone. Maybe a retrace back down to the top of this stuff. Right here. So we may do something like this where we go up just a little bit more. Retrace back down to here. Maybe to the roadmap line. And then it breaks higher. Could do that on earnings. It could do a big retrace on earnings, possibly. That wouldn't surprise me one bit right there. All right, SQ, hit the targets. That was a beautiful, I issued this as chart of the week back here. in Discord and on X, I think. It popped right up to the target. I mean, look right there. That was the activation level, and it didn't really give you a great entry. It just kind of went from down here, consolidating, to right up to the target. Now, what do I expect? Unfortunately, back down again. That's kind of the long and the short of it. You know, we could potentially hold here and pop that 91 area. Potentially, we've kind of pushed a little deeper than I would like to see before we do that, but we could. I mean, could pop right up there. Then I would expect something like that. And it could be, you know, if the roadmap line moves up higher, it could be up here. If you want the roadmap line, that link is in the description down below. Click the more button. It's like $5. Or you can go watch it on YouTube. I've got videos on how to put the code in. You just don't want to support me with $5. That's cool. It's out there for free, so you can go get that. No big deal. And CNC, yeah, we're already at 615. CNC finding support near the roadmap line. Didn't actually touch. Close enough. Close enough. Would have liked to see a touch, but didn't have to touch. Break above this 79 area. Probably sets us up for 83, possibly 85. SGOL. Physical gold. And that looks pretty strong. I mean, definitely better than the GLD chart, right? And more retrace could be in order. I mean, we did push almost out to the 272. Could retrace it back down. One more fib line before we could. So this is difficult. If it's going to keep climbing the fib ladder, it may retrace here and push on up to the next level. Arrow. Push on up and then retrace and then push on up. And those push-ups, you can keep going. 22, 22.94, 25 would probably be the ultimate target before we get a bigger retrace. We just keep ping-ponging on those fib ladder, you know, climbing the fib ladder, I call it. One of these levels is usually where we top out and then get a bigger retrace. One of these bigger pullbacks. Alrighty. JPM. Just cruising. Oh, look at that. Hit the target. Imagine that. Where'd that target come from? Well, it came from this right here. Right there, that 1272. 215 would be the next upside. Or 214. Next upside resistance area. Right up here. Then 259 above that. Since we haven't really retraced any since October, be very cautious. We could get a retest of that 172 area very quickly. All right. Mark. Topped out the 1618. Back to the 100. If we hold here, we could go for the 134 area. Why do I have the fibs I have? Because they tend to be upside targets. So if we're going to break back up through here, there, if we break down below there, we're probably coming down to at least the roadmap line. Get the right tool clicked on. Could be back in that zone. Alrighty. It's not magic. It's just statistics. Sam from Boston. I think that's how the commercial goes. Oh, Kimberly says tell everybody hi. She was at the Washington D.C. Zoo all day, and her battery was run down on her phone, so she couldn't watch. Couldn't tune in and chat. This looks like we're about to break down and go lower. It's like the last ditch effort. If we don't save it right here, watch out for an extension. How much of an extension? Fortunately, that may be down to 251. Right there. Not looking too good. Gen Zers don't drink beer, so it's kind of a problem for beer brewers, it seems. And BT, BT, I hit an extra letter. Has found support at the point where I need it to hold support. Could push on lower, 176, and it's not even moving on the log or not log. So if we can hold here, got to break above the resistance of the roadmap line, and then we can look positive. But that's a downside bias at this point, and we're at the target. So I would like to see it at least retrace to the roadmap line and then bust through if we're going to get some positive action. I don't really want to see it get lower than this crap it did back here. Really don't want to see that. Otherwise, it starts looking pretty bad. So that's what we got right now. That's kind of like the bubble pattern, just on a very small scale. Went up to 5 and then came right back down. I'd like to see it hold a higher low and go again. Sometimes that's the shakes. PHM. Right up to that 113. Man, look at that. I climbed the field ladder. Like, sometimes they don't slow down until 272. It popped the 2618 at 113. Could keep on going. 130, 141. Oh, I don't even have the 686 turned on this chart. Eventually, though, I expect a retrace similar to this one. From some point here, probably back to the roadmap line, over in here. And PayPal, PYPL. Messing around, can't get above this consolidation. That's a lower high so far. Very cautious until we can gap fill this baby over here. Got that resistance hanging there. That gap down is going to be a major resistance for now. Till we can get through it. Still downward bias. Been expecting that bottom area right there for a long time. Would not surprise me one bit to flush down there. Coin. I would really like to see a retrace. It may not do it. It may just keep grinding. We came up shy of getting above the breakout point, the 618. If we can get above that and above that high, 538, 760 or 676 would be my upside targets up there, way up there. Way up there. So if we break above this, that's a long for me. If we get a retrace here and turn back, I would take an aggressive entry. Here, not going to get involved. Too uncertain. Too much uncertainty right here. If we can retrace and break and turn, I'll get involved here, looking for a power through out to the targets. But as far as right now where we are, I got nothing high probability. I would expect a retrace, but it doesn't have to. It can just keep grinding in this area. Grinding until we get up through, and then we can go. Or it could just pop. I mean, it's entirely possible, but we may see this grind into earnings, possibly. That vertical line is the halving event. In case you didn't know, Bitcoin halving is coming up in about 30 days. About 1 month away. April 19th, roughly. AI. All right, do a few more and then I'm going to have to go. AI back to the roadmap line. That's a 3-wave move with an overlap. Oh, man. I don't like that at all. Not one bit. That looks like we may flush on down to 1850 area. That would be the target if we break below the roadmap line. We get below, watch out. That thing's flat. Watch out for that flush out. And now we could go all the way back down. Losing tons of money. They lose a lot of money. And starting to look kind of like a Head and Shoulders. See it? Head, shoulder, head, shoulder. Sloppy, but potentially there. Depends. You'd pull it over here, maybe. Break below the neckline. Watch out below. That could take it. Ooh. Let's go. Let's go. We go from that high down to the neckline. Oh my gosh. Oh my gosh. Ooh. That'd be rough, wouldn't it? Yeah, be careful messing with that one. Yeah, I would be very, very careful. Early dead SOU in LATE. I have a long position on. It bounced off of them. Drop down. Frustrating. So I bought a long position. It's underwater. I think I have shares. Maybe I have options. I don't remember. Looking for a pop-up in that area. This is a measured bounce potential along with a roadmap pattern, but my power pattern. But obviously it's going to wind up a little bit. It reminds me kind of like what Bud did. And Bud did the same sort of thing back here last year where we retraced, held that, and then consolidated forever before it finally popped back up to here. And then now we're consolidating again before we can pop again. So that's kind of what we got on light. It's just holding a measured bounce. That was potentially bullish, holding that area. Now we've set up a good solid resistance point. If we can break above that, I may add on or move on higher. Right now, no indication that we're going to do it. I mean, it could fail if we get below about 41. It might go down here. There's your support zone right in there. SMCI. Yeah, you got to go way out on, $800 put out as far as you can go. SMCI is going to unravel at some point. When? I don't know. BITO is just a Bitcoin derivative, and it may retrace more, but it may be done. It's hard to say on derivatives. Derivatives. I just go to Bitcoin and chart it, which we didn't actually do this evening, but that pullback may do an echo right there. We already did the echo basically on Bitcoin. All-time history right there. This pullback right here is the same size as basically what we did today. Oh, I didn't draw it properly. Let's go to 30-minute. You can see it a little more clear, a little more better. Right there, right there. From that high, we basically touched the same size retrace. Made a move up, made a retrace. Potentially trying to get something going, but so far not. So that may have been just another move before we push on down to the bottom of the box here, where we found. See, we did these flash downs twice to that same zone. Right there, right there. You see those big candles? May go test that one more time. One more time, right down there around 59,000. That may be indicating that we're going to do that one more time. And if we break down below it, Could be in for a bigger retrace. It could go all the way back down to this zone down here. That'd be pretty wicked, pretty rough. Wouldn't surprise me, but it'd be pretty rough. There's going to be volatility ahead of the halving. We typically see, I think 2 out of 3 times we've seen a large pullback in front of halving. Wouldn't surprise me one bit. You may be like, halving? What are you even talking about halving? These halving events before. When we roll back in here, we come back, see right here, large pullback right in front of halving. This went down 60%. I mean, ouch. Be careful. Time before that, we just got a little flash right just days before the halving. We did the bigger pullback back here. And then just kind of rallied into the halving. That was back in 2016. Now the first halving though, right here, we got another one of those flashes, and that one was a little further out. Right there. Yeah, it was a 50% pullback. That was about 100 days out from halving. That one right there was just, that was only like 15 days out, 2 weeks ahead, and we did a 30% pullback. We're 30 days out right now, just for comparison. This one right here, we started 84 days out. Dip down, that 60% correction. So typically, we see pullbacks ahead of halving. I didn't actually expect us to make a higher high before halving, before we got the pullback. So what would a 60% pullback look like? I mean, 30% would take us back down to 50. 60% would be back down to this area. Kind of where I have a giant target that we may pull back to. Back down around 33. That'd be pretty rough. That'd surely be enough to bum a lot of people out on crypto. Welcome to the volatility. So support here, and support, roadmap line and here. Just gonna move that. So just be careful. All right, the big show is later. Like the big show, I don't even expect to kick off until out here. That's why I have this big orange zone over here. That's where I expect us to really start running. Over here. This over here is just going to be who knows craziness. We got to bum everybody out, so we'll probably do some sort of pullback. And then we'll go on the actual run. This is not the actual run. Just throwing that out there. Alrighty. Tesla, probably going down to 158. Target hasn't changed. Google, quite possibly on the way up to 161, 160. It triggered the entry, 160 right there. I did not take anything, take any position. KRE, sitting on the roadmap line. Hasn't triggered the entry, which would be above here. Looking for 156. Could just break down lower. Support down here at these lows. It's just doing nothing at the moment. DocU is just messing around here. It did a 618 retrace and found resistance at that 618 for the upside. I bought a position looking for a bigger pop. Measured bounce up into this 83 area. We may find resistance at this zone where we turn down at 68. So I wouldn't count on more than here, but we could go up here. PT already did. UCO is a leveraged instrument, and it's the same. Like I put this out chart of the week weeks ago. Same thing. There was your aggressive entry above 32, conservative entry above 34, and it's all the same. All the same stuff. Nothing's changed. All right. Rolling on down. AMR. Measured bounce. Market roadmap bounce. Move up through 396, looking for 491, 546. And MDT. We're gonna hit a whole bunch real quick. Been going way long here. MDT. Lowest low. Resistance there at the 86 area. Look for 91, 93 if we get above it. And if we break below it, watch out. May go down and test the gap. And PUT is a piece of garbage going lower. Dumpster fire, baby. Look for $5 on PUT. MSOS already did. FCX is potentially played out for now. 1272 would expect a retrace, possibly 47 on the upside. And J&J is chopping. We failed to break out, retraced, and upside target 165, 168, and the top of the channel up here. It's in a big down channel, so just parked in the middle. And SBUX. SBUX is bearish. There's the target, 86. Visa is played out to the upside and needs a retrace. I would not expect any more. Could go more. I wouldn't expect it. 307. And see you in the morning. And there we go. MAR. Marriott. Would expect the retrace right here. It's showing significant resistance, so watch out for a bigger retrace. And you're welcome. Avalanche, AVAX, USD. And we'll get that off of that one. And that looks like that's a bullish chart. That's why I hold some of this, actually. Looking for 95 probably right now. Somewhere up in that zone, which just happens to be where it found resistance before. Then we get a pullback, and then the next move, which could take it way on up there. Ooh, right up in that 120 area. So that's kind of what I expect this to rally up here, pull back, and then finish up here. There you go. That's Avalanche. And GLD. Already did a couple of gold things, but basically GC is what you have to go to. Any derivative is pointless. You got to go to the source. But further breakout, entirely possible. But retrace, entirely possible. So my big target right up here. We haven't gotten there yet. We haven't even gotten to the crap target at 208. So 219. And possibly even much bigger potential wind up in gold. GC1 exclamation point is the place to check it out here, though. Here's the story. We are in a little bit of a bearish pickle here, doing a gnarly consolidation. May need a push down into this 2139 area before we can find a bottom to turn and burn. But if this was it, this higher low situation, breaking above here, got resistance right there. We consolidated for a couple days. That's the resistance to get through. If we can get through that, upside targets 22.15, 22.31, and we'll see from there. All right, XLF. Upside target right there, 43. All right. Thoughts on meme coins? How many you want to talk about? I mean, there's 2.2 million. 2.4 million. We just updated it. Cool. 2.4 million. They're crap. Complete crap. Anyway, be careful out there. Entirely out of my realm of possibility to talk about 2.4 million cryptos. So hype coins are hype coins. They're just, here today, gone tomorrow. They do this pattern right here. This is what they do. They'll do that, chop a little bit, and then drop. That's the pattern. If you can catch it in here, great. If you can catch it, get out up here, great. If you wait until down here, that sucks. If you get in up here and you ride this down, good luck getting your money back. Bag holders. There you go. Anyway, have a great evening, everybody. I'll be back live 9:15 in the morning. Make sure you subscribe over there. Make sure that you hit the bell with the notifications when I go live at 9:15 tomorrow morning Eastern time. I will be live before the market opens, and we have FOMC day tomorrow. That'll be interesting. 2 p.m. Set your alarm. Set your alarm for like 1:50. Like, uh-oh, it's time. Have a great day, everybody. I'll see you in the morning.